All right, everyone. Well, thanks for joining us tonight on our monthly webinar. For those of you that don't know, we did switch the topic this month from how to stay out of jail to basically how to protect your assets with this COVID-19 stuff going on. So we did just change it this morning, last minute, and at the advice of Merrill, which we really appreciate that advice. I think it's well needed, and we're going to touch on some great subjects here. So we'll be doing a Q&A at the end, which will be the main portion of this. So if you do have any questions, please type them into the Q&A section. We will not be taking any questions from the chat section, so please make sure to use the Q&A section. So we're just going to start and go down the line and have everyone introduce themselves, and then Gary and I will ask some questions and then go into the Q&A. So we appreciate all the panelists coming in, and let's start with Jillian, if you can tell the group a little bit about yourself and what you do.
Hi, I'm Jillian Sidoti. I just started a Facebook Live, so I accidentally was listening to myself while doing that, which is not the way you do a webinar. But anyhow, I have a firm called Trowbridge Sidoti. We can be found at crowdfundinglawyers.net. We do securities transactions for any type of business, but most businesses that we work with are real estate investors who are trying to raise money for their deals. And both my partner and I, Jean Trowbridge, are CCIMs. So we know quite a bit about real estate. And I'm so happy to be here and looking to mix it up a little bit with my buddies Merrill and Mauricio. M&M, that's their new name.
Perfect. Merrill?
Hey guys, Merrill Kaliser here. I've got a syndication real estate law firm out of Dallas, North Texas. We represent clients pretty much throughout the country. I see both of my counterparts at a lot of the events. I'm a former corporate bankruptcy lawyer, restructuring lawyer. I've been getting an enormous amount of calls in the last 4 days. It's amazing how impatient people are. But we're here to hopefully help provide some guidance with the literally ever-changing events. They seem to be changing literally every 5 minutes. But happy to be here. Thanks for inviting me.
Yep, thanks for being on. And then Mauricio?
Yeah, my name's Mauricio. I'm the founder and CEO of Premier Law Group. I'm also a syndication attorney, like my good friends Merrill and Jillian. 100% of my practice is real estate syndication, but we also do real estate and transactional. I got a really great attorney who's really the expert on the real estate side, do all of the transactional work. We do it in all 50 states and actually internationally. So we've got some international clients who are raising capital to do deals here. So I've been doing it for a while, 20 years. I think I'm the young one here. I'm not sure that's true. I don't think that's true, actually. I think I'm in the middle. But anyway, looking forward to add as much value as we can. And yeah, thanks for putting this together. Appreciate you inviting me and putting it together for everyone.
Oh, hey, Kyle and Gary, who are your lawyers? I just want to...
Oh, man. Let's talk about that later. Thanks,
Okay.
Jillian.
Yeah. Who were your lawyers?
All right, so I'm going to hand it over to Gary to get started on some of the questions, and then we'll kind of go around the horn.
All right, well, thanks again for you guys being on. There's so much information out there, and it's constantly changing hour to hour. But why don't we go around the horn and tell me one critical thing you're advising clients today based on COVID. Jillian, why don't we start with you?
Just not to panic. I mean, what are you going to do? There's nothing you can do. There's zero you can do. Whatever the government does, you can't do anything about. Whatever your tenants do, like, you know, one of my clients is doing a thing where they're sending out a notice to all their tenants to say, hey, if you pay on time, we're going to give you a discount. That's a great way to motivate people and to be fair to everyone and still get paid. So the reality is that people are still going to owe money. They're going to owe you that rent. It just might come later, but hopefully what is going to happen is it's going to be a whole, not trickle down, but trickle up event where the tenants don't pay, and thus and so the landlords don't pay their mortgages, and thus and so the banks, you know, unfortunately get bailed out. But at the end of the day, there is just nothing you can do. We were talking about it before we started broadcasting. We've never seen anything like this. And what I've explained to my children is that as bad as this might seem, it's not that bad. We're sheltered, we have a place to live, and there's not bombs dropping on us, which is not what we can say for many countries, or not what we can say for, World War II Europe. Not to get weird on you guys, but like, that's the reality of the situation. So just don't panic, sit in place, just like we're being told to do in our homes right now.
Great, great. Mauricio, what's one thing that you're telling your clients?
Along those lines, we're telling clients that, you've got options. A lot of people are freaking out and they think that, oh my God, I've got to, back out of contract, so I don't want to do that. And so we've been really talking, we had a great webinar over the weekend. We're talking about these 3 pillars and, number 1, everything's negotiable. Number 2, communication is your friend. Communication is key, just like Jillian said, get out in front of things. And then you've got options, even though you may think that you don't because you've, passed your due diligence or waivers. If you're in contract, I'm specifically speaking of people who are in contract, but there's always options. So just make sure you're touching base with your team, your professionals, and making sure you know what your options are. Because that's, at least on the legal side, that's what our job is, to let you know what all the options are. And then you can make intelligent business decisions and investment decisions based on those options.
Good stuff. Merrill, how about you?
Oh, I don't tell me. There's nothing. No, just like Jillian and Mauricio, it's funny. I start every email in all caps, and it's probably been about 200 a day, literally, some of the same people. Patience. One thing that we're being bombarded literally every second with some information that's probably true, some information that might be true, some information that's half true. Things are changing literally every second. And the reality is, none of us today, unless we had a bunch of stocks that we decided to sell on a downturn, are in any different position than we were 2.5 weeks ago.
Right.
Rent hasn't been due yet for April. And I'm speaking as a syndicator as well. I have 3 deals currently under contract, aside from what we already have. And so I am right there with everybody else. Mauricio is 100% right. Can't believe I said that. Mauricio. But everything is negotiable. I have, and some of my clients have successfully renegotiated extension due diligence periods, renegotiated hard money now being soft money, renegotiated financing contingencies. Interestingly, all this stuff was in play 2 years ago. And so things are negotiable. Not everybody's going to play. But the reality is, people just have to be patient. Let the government do what the government's going to do. They're bumping heads. They're going to pass something. We've already seen a hint of it, where tenants are going to get bailed out. Small businesses, which can be property management companies, law firms, doctors' offices, they're going to get assistance so long as they don't lay people off. Things are going to happen. They're not going to happen at lightning speed, but they're going to happen. We may even have medications that they talked about this evening, and I come from a family of doctors that told us to look at these medications 9 days ago, that are already showing unbelievable results in France and in Italy and China. So that could turn what we have right now into just a bad flu in theory in 3 or 4 weeks. We don't know. Exactly what Jillian said, who she's now coughing and doing. But everybody
based on what you're saying.
it's just got to be patient. Bottom line.
So you're unique for the panel because you have properties. So what are you doing right now to mitigate your investor risk and for your properties?
So probably the same things that Mauricio and Jillian have advised their clients. Number 1, communication. Communication first to the investors. Well, actually communication first to the tenants. And literally contemporaneously with the investors. We always have a 6-month OPEX reserve. That's just the way we run. It's the end of Q1 in 7 days. We're not making distributions. We could make some small distributions. We've told our investors we're not going to make distributions on this quarter. We may make them in addition to what we want to make next quarter, but we want to be safe. We want to make sure we have cash reserves. We know there's an economic vacancy coming. It may be temporary. It may not be temporary, but we know whatever is going on is not going to happen in 8 days. So we're prepared for a 30, 35%, even 40% economic vacancy. But communication's the best. Our leasing offices are closed but manned and womaned. Sorry, Jillian. But we have people in there that are working if they can prove that if they can show, each other can show that there's no symptoms, they will show a unit if they feel comfortable doing it. It is their call. In Dallas, it's a little bit like California now, or parts of California. We just went to a shelter in, but interestingly, property management is considered an essential service right now. So property management is not in a shelter in Dallas County right now.
Yeah, interesting. You know, we've been showing our properties, you know, online and whatnot. And we actually had a lease up the other day, and more people interested in leases, believe it or not, in Arizona. So again, we also have lots of cash reserves, so we're feeling okay. I'm going to read a paragraph here, so bear with me. Just came out today. The federal government announced that both Fannie Mae and Freddie Mac are offering multifamily owners forbearance on the payment of mortgage payments in exchange for eliminating evictions for the same period of time. The loan payments are, the loan payments are in the forbearance period. A couple of notes: not all of our client loans and not all of our clients' loans and owned by Fannie or Freddie. Sorry about that. But it's a reasonable certainty that other lenders will follow suit. There is also, at least not in this publication, any real definition as to the details of the forbearance, length of time, terms, conditions, etc. Can any of you kind of talk about that and you know, what that means for an owner of a property?
I think it goes hand in hand. I mean, you know, clearly you're seeing a move towards eliminating evictions, right? I mean, that's you know, I don't think it's nationwide yet, but it's certainly I'm in California, so you can imagine what they're doing here. And so I think it's just only natural. I mean, let's not forget who's running the show. I mean, you know, he's a property owner, and he's got lots of friends who are property owners. So it just stands to reason if you're going to be prohibiting evictions, you know, we all know tenants, not all of them, but a lot of tenants are not going to pay because they know you can't get rid of them. Which is, again, this is why you want to get ahead of this. You want to get in front of it, and you want to be calling your lender, and you want to be telling the lender, look, I'm expecting some economic vacancy. We all are. That's not going to be the first time they heard that. You're not the only one. And look, let's restructure our loan. Give me, if it's not mandated, let's, you know, again, everything's negotiable. So hey, maybe we can get a little bit of a forbearance and tack it on at the end, because we are going to see economic vacancy. And the last thing the bank, I can guarantee you, the last thing the bank wants to do is take over your property. Just like in 08, they're going to work with you. And like I said, the quicker, I think the earlier you get in there, the better. When you're talking to the lenders, you don't want to be, you know, there's going to be a huge rush at some point. So just again, communicate with your tenants, communicate with the lender, and get in front of this.
Well,
Are there downsides to taking on this forbearance at this point? Is there a reason why someone would wait maybe 30 to 60 days to take that on? I know obviously it's not a complete forgiveness of your payments, and that'll likely be tacked on the back end, but is there any downside?
Kyle, so you said it's not a complete forgiveness. There's zero forgiveness in a forbearance agreement. This is coming from the corporate bankruptcy side. So it's just a delay. And I highly recommend, I would assume, and I speak for Jillian and Mauricio, if a bank does approach you with forbearance agreement, you need to get your lawyer involved. It is not going to be a one-page doc that says you don't pay for the next 3 months and we're going to add 3 months back at the end. It is not going to be like that. It's going to give us or give people help, but it is going to be like another set of loan docs. I promise you that's what it's going to look like. So get in touch with the lawyer, either your syndication lawyer or whoever helped you work on the loan docs. Make sure you have a lawyer looking at them. They're not forgiveness of debt. And by the way, Bank of America has already said they would do this, and so did Wells today. This is from our clients that have been talking. So no one's going to give exact details yet because the federal government hasn't determined how much they're going to bail people out. I shouldn't say bail people out, bail the banks out. So it's coming. Again, it goes back to just be patient. You're right, though. You guys are, Mauricio, you're 100% right. People should have already been talking to their lenders or their brokers, putting them on notice that they're concerned. Not that the house is burning down, not that no one's going to pay rent, but they're concerned like everybody else is, just so there's open dialogue and communication going back and forth.
so for people that have never been in this situation before, so let's say I collect 70% of my rent. So not that we know the rules yet, but would they basically cover the other 30%? Do you know how it would work roughly?
Yeah, it depends. It's
Right.
gonna depend on what your docs say.
Right.
They may require you to have sweep accounts once you go into forbearance. Doesn't mean you're doing anything wrong, but they're going to add extra protections. I just saw a soft commit from an agency loan 2 hours ago. I don't know if everybody on here has seen the most recent one. They're up around 4.5% to 5% on Fannie and Freddie loans right now. They've gone up over 100 basis points in a week. And not only that, I have a client who's got good standing and reserves. They want the client to escrow 9 months of debt service as part of the soft commit. So
9 months.
9 months.
That's ridiculous.
Well, it is, but the banks can do what they want to do right now.
Mm.
That's the problem. Now
Touché.
again, that's the banks being fearful. They're fearful.
They should be. They're like, they should be. Like, honestly, here's the thing. Because Americans are not going to stand for banks being bailed out again. Right. They're not going to stand for that. And that is in part the problem, right? If we hadn't, or the government hadn't bailed out the banks in 2008, then you probably wouldn't see this, like, you know, anger towards the banks being bailed out again. Like, I've already seen people being angered at the fact that Boeing's going to be bailed out. And one of my friends pointed out to me that Boeing's the largest exporter in this country. The government is going to bail them out. It's that simple. So, you know, the reality is, as much as Americans probably don't want it, and they'll probably lose their minds over it, and there's going to be a lot of Facebook chatter about it, the banks are probably going to get bailed out. But there's going to be a lot more of this time.
Yeah. Can one of you guys take on, you know, everyone here just saw a week or two ago, the Fed lowered the rates to 0. So everyone thinks that the mortgage rates are going to be 0. Can we, and I understand why the case is because of the demand and the spreads widening, but can you go into detail as to why that is? Why the rates actually have gone up versus come down?
Well, I mean, it's simple because the banks want to make money, and the only way they're going to make, first of all, anybody who has equity in their home is looking to pull the money out of their home. I'm going to be a little honest right now. I'm sitting on a house that I owe no mortgage on. The house I'm living in right now has no mortgage on it. I paid it off last month. The last $400 I paid off last month. And I want to pull out money now because who knows what's going to happen. And I heard that interest rates were down to almost 0%. So I thought, hey, let me go pull out some money out of this house. And it turns out that I can't, or it doesn't make sense for me to, because the mortgage rates are still around 3.5%. That's not that bad. That's obviously pretty good compared to, like, you know, 1980s rates. But the reality is that that's still not 0%. That's not what the banks are paying. And the banks need to make money somehow. And if somebody's pulling out money right now, they must have a reason for it, and they must be desperate. And thus, and so they can charge that much.
It's actually, I agree with her on the home mortgages, but it's actually quite simple why the spread went up. You have to look at the cause. The cause of why we're near 0 is not a normal cause.
Right.
It's a cause based on worldwide fear. Okay.
Right.
Worldwide fear. Paper money is worth less. We're going to print 1.6 or $2 trillion of it. We're going to go into probably deflation first, and then hyperinflation most likely, unless we get out of this fairly quickly. So yeah, the interest rates went to 0 on short term. Okay. And in a different scenario, it might translate to better rates for us. However, why they went to 0 scares the hell out of the banks, because why would they go and lend lower rates to people that depend on others who no longer have jobs to pay those mortgages. So now what they're doing is it's a converse relationship. So you're going to get charged more. You're going to have more restrictions because they have very little confidence in people paying their rent, which pays their mortgage. So to me, it makes complete sense. It probably doesn't make sense to the average person. Well, why would the rates go up? Because right now there's they're forecasting, what was it, 4 million people unemployed this week, and it was like 200,000 or 180,000 last week. You know, that scares the hell out of the banks. I think if people are patient and can get some extensions on financing, I think in about 3 to 4 weeks, this is going to settle out. I don't think it'll be perfect, but I think we'll have a better grasp on what's going on with COVID-19 and some of the medications, and maybe protocols in certain areas will be more laxed. I think some people will go back to job. Will it go right back to where it was 4 weeks ago? Hell no. Could it in 6 months? Absolutely. But it's just a matter of people have to be patient. I just answered a question on the chat. Someone is very concerned about, you know, what's going on right now and what they should be doing. I mean, the reality is nothing has changed from 3 weeks ago, other than everybody's afraid. No one's lost money yet. No one has shown economic vacancy increases, which I'm sure that will happen. But people still have to pay the rent. Dallas just became California. It's crazy. Thank God I don't have properties in Dallas. But we have 60-day hold on evictions. That's like dogs and cats living together in Texas. That's unheard of. We like to kick people out in Texas. We kick them out in, 21 days, they're gone. But that makes a difference, and you're going to have people that are going to take advantage of that. But what people need to understand, what syndicators understand, rent is still due. You may not be able to exercise the right to evict them in the next 60 days, but rent is still due. So they can still be in breach of the lease. Things will still happen, but they're going to happen 60 or 90 days later. You don't want that to happen, but if people will just relax and be patient, some of this stuff is going to play out. The fear is going to go away from a lot of this stuff, and we're going to go to I think Jillian would probably agree, a new norm. It may not be the old norm, but it'll be a new norm where there's not as much fear.
I mean, I just want to agree with Merrill. The thing is that there was a comment that, we want to focus on multifamily, but the reality is for me, in the terms of economics, multifamily is the lowest common denominator. If people can't afford their rent, they can't afford anything else. They can't afford to go out to eat. They can't go out to buy clothes. They can't afford to go out to do entertainment type things like going to the movies. So it's all relative. And then those people who are in multifamily, lowest common denominator, which, by the way, lowest common denominator is always the biggest number. The lowest common denominator can't go out and do all these things like eat out, go to entertainment, buy clothes. Then those industries, and I just named 3, and I could name probably a dozen others, are also not going to thrive. It's all trickle down. So my reality is, and your reality should be, and what I've been telling my clients is, calm down, sit, wait, be calm, be the peace in the storm. Don't panic, and don't panic your investors either, especially your baby boomer investors who rely on that money for their health care in their twilight years. So stay calm. I can see the poster in my mind. What is the poster that England put out during World War II? It wasn't stay calm and chive on, but that's like the, do you know what I mean? It was like stay calm. I don't remember what it was, but it was like stay calm and something.
I know, Mauricio, you wanted to add something there as well.
No, I think. Look, I'm not by no means an expert in economics. I'm sure there's other people way more. I mean, I've got my thoughts, but no, I was actually going to pivot a little bit. I mean, I think we've been talking a lot about what to do, which the message is very clear on. If you've got your properties, you're waiting for tenants to pay. Do you contact your lender? But I know a lot of people are also interested in finding out, what if you're about to go into contract, or what if you're in the middle of due diligence, or what if you've cleared contingencies and you're on your way to close by the end of the next week? What are some of the things that you do there? So I don't know if you guys wanted to pivot there yet, or if you wanted to finish up on the.
Yeah, I want to ask one more question about forbearance, and then let's jump into that. So let's say you opt for forbearance, and does that stay on your record? Is there any, like, when you want to do a loan down the road, is that going to show up?
It depends. Like that lawyer answer. So again, you guys are laughing, but Mauricio started this off with everything is negotiable.
Right.
Just like your forbearance agreement, everything is negotiable. Before you sign any documents, you're going to have a lawyer, whether it's one of the three of us or somebody else, you're going to have a lawyer go over the docs, and hopefully the lawyer is competent enough to ask the other side, is this going on my business credit? Or is this something that is going to be the norm, which I truly believe it is, where it won't have an effect on anybody as far as negativity. I think your investors, if you're a syndicator, would much rather you be discussing a forbearance agreement than draining the cash. I think you have a fiduciary duty. I think everybody who's a syndicator has a fiduciary duty to explore all avenues that lessen the risk to the investor's money. At the end of the day, the syndicator has a duty to preserve capital. At least most of them do, because that's what they've stated their number one goal is in their investments. So, forbearance agreements, possibly taking out loans that may be forgiven for property management companies. It'll be interesting to see if that happens. I was actually excited about it. I could have the government pay for my salary for 2 months. That would be great. Or I go get a job with Jillian. But yeah, I know, I didn't think so. It's negotiable. So don't sign anything. It's just like buying a property. Everything is negotiable. Don't do it on your own.
And I think also, if you want to, again, maybe we need to talk about something where I disagree with Merrill, but I agree again with Merrill. Look, go back to 2008, right? People who were in foreclosures and had deeds in lieu, and you handed over your keys, or you went to bankruptcy. I mean, Merrill, you're the bankruptcy king. That became the norm, and it really didn't affect you. If you go back later and that happened between 2008 and probably 11 or 12, then it was just known. You're not the only one who had those issues back in 2008, and you're not going to be the only ones. In fact, you're probably going to be just like everybody else getting a forbearance. So you're not going to be the only one doing it.
Everybody is in this together. That's the thing. Like you are not an island, and it's hard. By the way, I say that very easily here on this webinar, but we're all in this together. And I've had my own personal struggles where I go, oh my God, I have all these employees I have to pay. I have to keep this wheel turning. I have to do this. I have to do that. And we're not talking, Merrill is the one in the trenches who owns his own properties and is raising money for his own deals. And he sees that. I happen to be an amazing passive investor. And I know I have a bunch of probable tenants who are not going to pay their rent in the next several days, or in the next month, or what have you. Well, several days now, because we're almost to the end of the month. So we're all in the same boat, whatever your boat might be, unless you are a grocery store worker or a doctor or some delivery truck driver, or Amazon worker. You're not making any money right now, or you're making money in a limited fashion. So we're all in the same situation, and you just have to, I'm saying the same thing over and over again. You got to just stay calm.
All right. Well, why don't we pivot now? So
yeah, let's do that.
Let's say you're in a contract to buy a property. You've waived financing contingency. You've got, $200,000 hard money. You don't have, force majeure in your contract. What are your options?
Let them sue you. Let them sue you. Oh, Merrill. Sorry, Merrill. I didn't mean to call you Mauricio.
You've got hard money down, so you don't want to lose it.
Merrill, what do you say? Well, listen, I've been in a situation where we lost a lot of hard money back in the last downturn for a totally different reason, obviously. But so I'm used to losing hard money. But forget about that for a second. And Merrill, why do you disagree with me? Because to me, it's like, go ahead, let them sue you. What are they going to do? What are they going to do right now?
Yeah, I don't think we can forget about the hard money, because $200K is real, and it's typically going to be the syndicator's money.
Sure.
You ask a question that I literally had 2 clients today in the exact same position. One was closing today, and the financing number was changed at the last second, Friday. And so, you know, it's there. First of all, once it's hard, it's at the title company, you know, unless it hasn't already been released, which many times it has been released, depending on the agreement. The title company is just going to hold it. And if there's a fight over money that should have been hard and distributed, but it's not distributed, it goes to the court, and most likely it's still going to go to the seller. So the only suit that really is going to be there is the buyer trying to sue to get his or her money back, and not going to have much of a basis. You can try to negotiate a longer term, but the reality is if I'm the seller and I was already operating, and presumably my basis is lower than what your basis is going to be, I take the $200K, I say, thank you very much, not my fault, and I move on. And Jillian, I've been in the exact same position as you in 2008. I was probably in the worst position of anybody in this group in 2009. So I know what it feels like. It's a friggin' hard lesson. But unless there's an out in the contract, you know, we're talking about a vacuum here. Unless there's an out in the contract, all you can do is contest the title company from distributing the money, and that's just going to cause it to be deposited with the court. And then you're going to pay money, you're going to hire lawyers, litigators, and they're going to chew up more money that you're still not going to get.
Well, hold on a second. I'm with you, Merrill. I'm 1,000% with you. And, you know, I saw my portfolio go down a whole hell of a lot this week, where, but for the fact that I don't rely on that portfolio for income, I probably would have cried real tears of sadness. With that being said, I remember when I was in 2005, I got my first real job in real estate. We did condo conversions in San Diego, and my situation was where we bought an apartment building and we would tear it down to the studs, rebuild it, and sell each individual unit off as a condo conversion, as a condominium. And the reality was that towards 2005, towards 2007, we saw the wind start to change. We saw a lot of, you know, laws changing and the economy changing. And that was like almost like a double whammy. It wasn't almost like, it was a double whammy in terms of how things happened. And I remember at the time, you know, I had just gotten out of law school. I thought, you know, $1,000 was a lot of money. And my boss saying to me, all these properties you worked on doing the due diligence for, that you underwrote, that you did the budgets for, we're going to let them go. Our money has gone hard. We're going to lose that money. And I said to him, we're going to lose $300,000, maybe $400,000 if you let them go. And he said to me, Jillian, it's better to lose $300,000 than it is to lose $600,000. So when I agree with you, Merrill, I agree with you. And I lose $5 and I get sad, right? I do. I get it. But at the end of the day, we got to remember what a sunk cost is, and realize that you do not want to throw good money after bad. Now, I don't know. By the way, I want to be perfectly ignorant for a second. I don't know what good money after bad means right now. We've never seen this before. So
let me, I might finally get to disagree with Merrill. Finally, that's a good question. So look, I think I disagree a little bit. We talked a little about this. Actually, we talked a lot about this on our webinar, and I did a post on it today. I mean, let's assume, I mean, we haven't even talked about all the clauses. Let's assume, I think your question assumed that there's no force majeure in there, that there's no, adverse material effect, kind of clauses. So look, the seller, you are the seller's best option at this point. I mean, you've got leverage. If you want to renegotiate the term, again, everything's negotiable. And yes, the seller's got a contract, and let's just assume you have no clauses. Do you think the seller is going to want to just, let you off the hook so that they can start the process again with a new buyer and wait another 90 days or 100 days when,
in the unknown?
No, you can no longer have surveyors aren't coming out, appraisals aren't getting done. I mean, it's not going to take 90 days to close. It's going to take 120, 180 days to close. By then, who knows what the value of that property is going to be. So the seller's not in the greatest position. Some people were discussing, well, maybe they can just refinance instead. I'm like, yeah, good luck with that, refinancing your property. What's your loan to value? You think the banks are going to be lending on, current loan to values or new loan to values? And who knows what the value of your property is now with economic vacancies, most likely going to be in the 20 to 30 to who knows what percent. So I don't think the seller is going to be too excited to keep, 100 grand, 200 grand. They're going to work with you. And again, we go back to everything's negotiable. Communication is your friend. So call the seller, enter into discussion. And, at first they may push back, but ultimately, they're going to realize they don't want to put this back on the market and have to wait 6 months to get it sold.
And we're seeing about a 50-50 on that. I'd love to disagree with you, Mauricio, but I mean, we're 50-50 where we're seeing about half of the sellers on deals that are supposed to close either this week or next week wanting to do something, and the other half are basically doing what I said initially. They're just pulling back, and either you can get it closed or you can't. It's going to depend on the circumstances of the seller. And everything is negotiable. You could negotiate a little higher price. You could put more money down to buy yourself 30, 60 days. There's lots of different things you can do, but I think the whole point of this entire webinar is to kind of relax some of the fear. So the same thing for buyers should be for sellers. Be patient. I'd like sellers to do what Mauricio is saying they should do. I think sellers are just as nervous as buyers. They're either going to completely pull back or they're going to bend over backwards to get the deal done. I don't think it's a whole lot in between, and it depends on what type of seller you have. And the reality is none of our buyers that we represent knew what type of seller they had until right now. Everybody's being tested in a different way. It's very interesting to see the vast differences in responses from buyers and sellers when put in this situation. It's one day it'll be a great study, I'm sure.
Yeah, Kyle and I were in a best and final, and the seller just said, "Hey, I'm gonna hold on to it basically for 6 months because, it'll be delays, and then we'll probably have to retrade because rents, net operating income is gonna tank, our loan proceeds are gonna go down, and the property's worth a lot less." So he's like, "I'll come back to you, down the road, So what do you guys, for people that are like about to enter contracts right now, they've already signed the LOI and things are moving forward. Let's briefly talk about some of the clauses that you're putting in right now.
Mauricio, go first.
I mean, obviously we talked a little bit about the force majeure. That's probably number one. Hopefully there should be that anyway. I would be putting in a little bit more specific language, not just your conventional standard run-of-the-mill force majeure, but you want to specifically mention this, COVID-19 and any other related, pandemic. You want to put finance contingencies in it as well, not just the usual finance contingencies, but, in the event that, the lender decides to pull, the loan at the last minute or completely change the terms, you want to be able to have an out there. Under normal circumstances, once you clear contingencies, you usually got a commitment and you're pretty sure that's going to happen. But these days, who knows what's going to happen? And then there's always, material adverse change clauses that you may want to put in there as well. But just make sure those are, not the boilerplate stuff, and have somebody, like Merrill or myself, Jillian, draft those for you. And actually these days, we're actually recommending, in the old days, we wouldn't necessarily put that in an LOI because you don't really want to scare your seller away. because you're bidding up against, so many people. But, honestly, you could consider putting it even in the LOI now because, it's kind of common knowledge and you want to make sure you're very clear up front that that's the stuff you're going to be looking for in the contracts.
Yeah, we have every one of our clients right now, including myself, we're putting in it's a COVID-19 paragraph. It seems to be getting longer each day. But we put that in the LOI because either the seller is going to want to work within this type of provision or they're not. And it saves everybody a whole lot of time and money on whether they want to move forward or not. And the reality is there aren't as many buyers out there. So the sellers, this again, 2 years ago, finance contingencies were normal. 2-3 years ago, you didn't have to go hard day one. 2 years ago, you didn't have to go hard day one. I don't think you have to go hard money today. I really don't. And I'm in one of the most competitive markets ever. We're in Dallas and Houston, and you don't have to go hard on day one. Some of the sellers still think so, but when they see the offers and no one's going hard on day one, guess what? They're taking them. I just negotiated a deal with a 60-day due diligence period, with my COVID provision in there. And I said 15 days after that is financing contingency. And I have a 30-day close after that with 2 options to extend for another 20 days each. I don't know what's going to happen. I want to be able to have the time to take my own medicine and be patient. And I'm hoping, as Mauricio said, that a lot of the sellers want to be patient too. And, it's trying to find the right seller. You're going to find that right seller when you stick those material adverse effect provisions or COVID-19 provisions on the LOI. You're going to weed out those that really want to do a deal and those that don't really want to do a deal, at least right now in the situation we're in.
Let's, before we go to questions, any other things that we should have been talking about today that you want to add?
Yeah, so we're adding special risk factors to all of our documents right now that talk about the uncertainty of COVID-19. And that's literally what it says. Like, we don't know what COVID-19 is going to present. And so you need to be aware of that. There might be rental forgiveness, there might be loan forgiveness, but at the end of the day, we do believe that it's going to affect returns to investors. Maybe not the same returns to investors as the stock market has, but it is going to affect returns to investors.
And especially, by the way, we do the same thing, especially if you did your underwriting before COVID, and you've got all these assumptions put in place, you really want to take a look at, and you haven't started taking any monies, or even if you have taken monies, to kind of look at that underwriting again. And certainly if you don't change some of those risk factors, even become even more prevalent because, who knows? We have no idea. That's the problem. We have no idea what it's going to look like in 30, 60, 6 months.
I'll finish up before the next topic, but I just want to say I'm seeing some of these responses on the Q&A. There are still quite a few investors out there that want to put money into real estate. I might even argue there's some new investors that want to put money into real estate after seeing, for the second time now, a drop that no one could predict and so quickly. I think your smaller investors are very scared right now. I do think it's actually a very good time to buy. If you can weather the storm, I think it's a very good time to buy because the ability to negotiate now, we haven't seen in the last 3 or 4 years in markets that ultimately will recover just fine. This will pass. It's going to pass.
A falling knife. You're catching a falling knife, though, don't you think?
Well, I don't know about that. If you can buy enough time in your PSA and give yourself between 3 to 4.5, 5 months to close the deal, and negotiate a really good deal now that most likely can't be negotiated 3 or 4 months from now. I think you're buying time to get better financing. The banks are scared to death like everybody else is right now. The government hasn't come down with their latest $8 trillion bailout package, which will help the banks. And there'll probably be another one right after that. And then eventually they're going to get under control. China got under control. South Korea got under control. We're doing the same measures. We'll get it under control. The fear of the unknown will start to be gone. The markets will ease up. It's going to happen. So it's a risk. It's an investment, just like anybody else. I'm still bullish on it because I'm a former corporate bankruptcy lawyer. We used to help companies buy very large assets out of bankruptcy when nobody else would do it. We used to help what's called debtor in possession financing, DIP financing. Lenders would come into a situation where nobody would touch it. And shockingly, they weren't that bad of deals. DIP financing was not a bad deal in a Chapter 11. I was on Enron and Blockbuster and Kmart and WorldCom. These are massive companies and had massive amounts of debt, in addition to some fraud in some of them. But you'd be shocked the deals you can work. Now, you better know what you're doing, and you better have very good documents, and they better be airtight. And you still have to be prepared for the downside, like Jillian is saying. You know, are you catching a falling knife? I don't know. I don't know if anybody knows that right now. Last week and a half looks like crap. But I saw some glimmers of hope over the last 2 or 3 days for me personally that were very encouraging, not just on real estate, but as Jillian puts out, you know, just worldwide, seeing some interesting progress that I would have never in my wildest dreams imagined happening. So I am cautiously optimistic about where we're going. And again, it's patience. Just sit back. Jillian said, sit back, relax. You know, it's hard to relax, but try deep breathing, sit back, relax, and don't watch so much social media and news all the time now that we're sitting at home, not doing as much as we used to be doing.
I think that's great advice. Thank you, Merrill. Kyle, you want to check out the Q&A? What do we have going on there?
Yeah, if anyone has any other questions, just throw it in the Q&A chat real quick. We've got about 10 more minutes, and then we want to be respectful of everyone's time on the panel. So a couple that Merrill actually answered privately, I do want to just go ahead and make sure everyone sees this. So speaking of like the news and social media, that's where everyone is getting their news on, you know, COVID-19 and everything that's happening, which is leading to all this panic, in my opinion. So what are credible sources that people can go to just focus on one source, and that's the only source that they get their information on, if you had to choose?
I'm choosing, I know this is going to sound bad, but I'm choosing Yahoo. They have like a little scroll that tells you all the updates as to what's going on. Whether it's reliable or not, I don't know. It's just kind of where I get like a tidbit of information at a time. So, you know, what are you going to do? There's nothing you can do. Once you get comfortable with that, things will get a lot better for you. We're all going through the same thing. I've had these same issues.
Mauricio?
It depends what you're looking for. Like I am on social media. I'm reading a lot of the comments because I want to get a kind of a pulse on what people are worried about and what they're concerned about and what questions to go try and help with answers. So, you know, and then obviously there you get a lot of news anyway because people are posting all the links anyway. So I'm actually reading just a lot of the comments because again, I want to understand what people are talking about. Not for the gossip, but just to understand what they're concerned about.
Yeah.
Okay. And I know, Merrill, you mentioned Yardi Matrix, CoStar, various online data sources. So, and then another one that specifically was for Merrill. Why do you think deflation will come first, then hyperinflation? Any indicators you're looking at? And I think this is a really interesting one. So I'd like you to kind of expand on that.
Yeah. I mean, people are probably going to laugh, but I like to follow Harry Dent, who's just a crazy, I would say non-economist because he claims he's not an economist, but he's a pretty well-educated man and has hit the nail on the head numerous times. He predicted something like this, obviously not a virus, but something that was going to take us back down to a level where we need to have a correction. I don't think anybody could have predicted this scenario, but it was a prediction where the government would come in and have to pump in lots of dollars. And there's no bank, just so we're clear, there's no bank where money is sitting. Okay, the way to pump in dollars is to print it. And unfortunately, fortunately or unfortunately, our money is not really backed by anything other than our government. So it will devalue the dollar. It may only be temporary, I hope. But also keep in mind, the feds have kept inflation very, very low for the last 7 years, like lower than just about anywhere else in the world. So now we're going to pump more money in. We're going to see, I don't know how you're going to define hyperinflation. We're going to see increased costs in goods. We're going to see that just by virtue of pumping we're going to pump between $2 and $4 trillion into the market when this is said and done. The money, it's not coming from anywhere else. It's going to come from printing machines or digital numbers. So I don't know if that's going to be good or bad for us, to be honest with you. And us, I'm talking about real estate investors and those of us that provide services to real estate investors. Someone's always buying, someone is always selling. It doesn't matter what the market's doing. There's always someone willing to buy and there's always someone willing to sell. So it's just a matter of who understands what's going on, who has the database of investors that are probably like what Jillian says, a little older, have less in the market, understand volatility, understand risk. I think you're going to see this is going to push a lot of people more towards 506C than 506B, just because it's a much broader swath of potential investors that they think they can get. Whether they can get them or not, it's a whole nother issue. Are they going to get them the right way? Who knows? But this clearly is going to affect your sophisticated investors. There's no question about it. Those are the ones that I'm getting phone calls about clients and I can't talk to them about it. They are scared to death. That was their only 50 or only 75 or only 100 grand, or maybe they had 2 and 2 deals. They are scared to death. They don't have anything else other than their retirement accounts and IRAs, which they just saw lose 30% in value. So they are not going to be investing right now.
Do you think this could be the beginning of SEC ramifications because people are going to start to lose money as far as all the raising capital or the way things are structured and so on and so forth?
I mean,
well, let's do a roundtable here. This will be our last question because we only have a couple more minutes. So I feel like it's a good one to end on.
I'll say this. I saw the question and I saw they asked about Cardone Capital in particular. And I can't reveal too much because obviously attorney-client privilege, but the reality is at the end of the day, don't believe everything on the internet that you see. And, you know, every real estate entrepreneur is going to be affected equally in this new, unfounded, weird economy. So, you know, there is of course going to be SEC fallout, and there's also going to be SEC understanding. I don't trust the government more than any other guy that, you know, trusts the government out there, and especially lawyers don't trust the government. But at the end of the day, you know, the SEC only has so many resources, and they're not going to be able to go back after every single person who loses money. If you lose money honestly, you're going to lose money honestly. That's the nature of the game of investing. That's why we have risk factors in our documents. The people who are going to be problematic and are going to get in trouble are the ones who actually tried to rip off people and who did bad things. The original intent of this webinar was how to keep yourself out of jail. You ain't going to jail if you ain't stealing money. So if you're stealing money, you're going to go to jail and you're going to get nailed by the SEC. If you're violating securities laws, you're going to get nailed by the SEC. At the end of the day, though, if you lost money honestly because of economic circumstances or things like this that no one could have possibly predicted, then no, the SEC is not going to bother with you. They don't have the resources to do that.
I'm going to agree and disagree. So for sure, if the only thing that happened is that you lost investor money, look, nothing's going to happen to you. I mean, you know, same as 08. So a lot of people lost money in 08 because, you know, financing froze up and you couldn't do anything. But, you know, the issue is what, you know, as many of you know, I've been a little bit of a broken record about this stuff. But I mean, if you're one of the folks who have kind of been violating, you know, the advertising rules of 506B or maybe you have been, hiring money raisers and paying them a percentage of the GP. Well, yeah, the pin again is this issue, which is that, yeah, somebody complains and ordinarily nothing would have happened, but then they're going to dig into other stuff and see that you violated the money raising rules, you violated the advertising rules, and that's what they're going to nail you for. So I am concerned about those, but again, if you've been squeaky clean and you've been doing everything by the book and you haven't been advertising and you haven't been paying money raisers and you just lost money because of COVID-19, then I agree with Jillian. I don't think you've got much to worry about, but it's the other ancillary stuff that I'm worried about.
Merrill? I agree. And the three syndication lawyers, we're all aware of a large investigation that's going on right now regarding, I'm not going to mention whom, but regarding paying money for capital. And so those people are going to get in trouble, especially when there's a downturn, because there are going to be more people complaining. I would like to add on a closing note that I'm seeing a lot of people worried about raising capital. One thing I learned in 2009 and 2010 when it got kind of tight, your investors are looking for you guys to lead.
100%.
They already know that it's going to be bad. What they're looking for is how you handle it. Whether you lose money or not, how you handle it, you don't lose your mind. I'm going to use mind instead of a different four-letter word. And how you try to mitigate the damages, not paying a distribution right now because you swore you would pay a distribution every quarter is not going to look good to them when you're trying to make a capital call next quarter that's not mandatory, or you have to loan money to the company because you just wanted to save your reputation. Right now is when people's reputations are going to be looked at the most. It's going to be how they come out of this. And so again, it's Jillian, relax, and Mauricio saying the same thing. Be patient, communicate, and if you're going to make a decision that you think is a major decision, talk to your investors. No one has the perfect answer for right now. There is no perfect answer because no one really knows what's going to happen tomorrow. But you're looking at investors looking at you to shine right now. Shine meaning they just want to know, they want to be communicated with. We're communicating with our investors once a week right now. Sometimes it's same as yesterday or same as last week, but we're communicating, and it's amazing how many thank yous we get. We got thank yous saying we're not going to make a distribution this quarter. I mean, you would think that's weird, but maybe it was thank you for keeping us aware of things, and it was probably thank you for preserving our capital. In markets they see, in the financial markets where people, if they sold, lost 30% or more. So I think being patient, relaxing, communicate. You should be talking to your lawyers. Forbearance agreements are great. Honestly, I would wait another 2 to 3 weeks on forbearance agreements. Wait to see how your April turns out. Wait to see what the forbearance agreements look like in 3 weeks versus today. I would not want my clients to be the first ones to sign a forbearance agreement right now.
Perfect. Awesome. Well, I appreciate everyone on the panel. That's huge insights for us, and timely, obviously. So we appreciate your time. Thanks for staying a little bit over, and thanks for everyone who hopped on, and stay safe out there and have a good evening.
Thanks for having us.
Thanks for having us.